ServiceNow is scheduled to report its quarterly operating results after the markets close on January 29th, 2025. ServiceNow has some exciting product categories, and investors are asking if they should buy this AI stock before it announces earnings. I'll answer that question in this video. I'll also answer what investors should look out for, most importantly, from the company when it announces earnings results, besides from the obvious things of revenue and earnings per share. So let's take a look at this company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the things investors need to look out for from ServiceNow beyond the obvious is its new product launch. So the company announced its plans to integrate Agentic AI into the ServiceNow platform and unlock productivity at massive scale. With advanced reasoning and grounded cross-platform data across the Now platform, these AI agents evolve from the more familiar prompt-based activity to deep contextual comprehension. First use cases will be available in November for customer service management and IT service management in November. That means when the company announces these quarterly results, it's going to include the results from this new product launch that was available starting November. So investors will want to hear about this, how it's going, what the feedback is from the clients that are using it, what the orders are, and what the prospects are for this product, because the potential could be huge if the company secures deals for this product. The customers of this product could be saving significant sums of money just in customer service management alone. They no longer have to pay customer service agents to answer questions, to chat with customers online, to take phone calls. That could save a lot of money. But what I've been talking about with this service, more so than the cost savings, right? I think companies are uh, in general too focused on cost savings. The key is not just about cost savings, because if you're lowering cost at the expense of the value you're offering customers, that's not really helping your business, right? Those are not things I look at for when I'm operating my business, right? When I'm looking at improvements to my channel, I'm not thinking about cost improvements. I'm thinking about how I can add more value to my viewers. And that's where this agentic AI, I think, has more value, is in the improvement in the customer service department. Right now, customer service is, if I had to describe customer service across all business, I would say terrible, right? And I think many of you would agree. It's between terrible and bad, or terrible and really bad. You can count on your one hand companies that give you good customer service where you feel like, man, I had a question, they resolved my question, and I'm a satisfied customer now. That rarely happens. And so this is an area that's ripe for disruption, and companies will and are willing to spend money in this category because they understand that their customer relationship management and customer service management is lacking. It's lacking considerably. And the reason why the AI can be better at a lower cost is because it can be trained better and more cost effectively than humans can. To train a customer service agent to answer and be a good customer service agent would take quite a bit of time, right? Imagine all the things about a company that a customer service agent would need to know in order to serve customers effectively. Whereas with the AI, you can train it on your company's data relatively quickly, the proprietary data, and that customer service agent will know everything about the company in a relatively short amount of time. And when there are updates, that AI will have the updates in a relatively short amount of time, won't require all this extra retraining like humans will need to do every quarter or every 2 quarters based on changes in your company policy, changes in your company prices, and things that are, you know, business is dynamic. Things don't stay static for very long. And if you've trained your customer service agents on a certain set of tasks, they'll have to be retrained relatively quickly. So I'm bullish on this opportunity here for businesses to upgrade their customer service through artificial intelligence and do so at a lower cost than right now they're spending on their customer service as it stands by outsourcing it or just neglecting it altogether, like kind of like what Microsoft does. Try speaking to a customer service agent at Microsoft. I keep repeating this, but I've never been able to speak to a customer service agent at Microsoft. So they've just said, forget customer service. Let's just send everyone to the frequently asked questions. Let's send them to online forums. Let's just not be spending money on that category at all. We're too dominant to even worry about that. Who are our customers going to go to, anyways? Well, I went to Alphabet for my business suite services, and I switched away from Microsoft 365. So, more specifically, looking at actual numbers for ServiceNow, what investors should look out for is the company's current RPO growth and total RPO growth. RPO stands for remaining performance obligations, and management is forecasting RPO growth of 21.5% in the upcoming quarter. And total RPO growth is also an important metric investors should look for. RPO, remaining performance obligations, eventually turns into revenue. And so the company's revenue is all but locked in already because they've already signed the contracts and they know how much they're going to earn in revenue in the upcoming quarter. What's unknown is how many new contracts they're going to sign, what value of new orders they're going to secure in the upcoming quarter. That's the other big thing investors need to look out for from ServiceNow when it updates its quarterly financial results. As to the question, should you buy this stock right now? It's trading at a forward price to earnings of 52, which is right about where it's traded for at a fair value going back according to this metric. It's traded at a higher valuation and it's traded at a lower valuation before. 52 is right about the middle of where it's traded at. Now, I've had ServiceNow stock rated as a buy all year long in 2024. I last updated that recommendation on October 23rd, 2024. As to if you should buy this stock before it announces earnings, I usually advise against buying all of your allocation before earnings. I usually say buy half before earnings and half after earnings, unless there's a compelling reason to buy all before earnings. There's a risk, of course, that you miss out if you don't buy before earnings, but I'm okay with that. I'm okay. I'd rather take the risk of missing out on gains than take the risk of losing money. So that's just my preference as an investor. And there's always elevated risk going into earnings. And so I still have ServiceNow stock rated as a buy, and I don't see a compelling reason to buy before earnings. So I would recommend these two cases: either buy half before earnings and half after earnings, or wait until the earnings come out, digest the results, and then buy afterwards. Those are the two cases I would recommend for this very exciting, very compelling investment. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.